To the important voice of the day, Vinod Kumar Dasari, who's MD Ashok Leyland, joins in to talk more about how the sales have panned out so far and what's the trend more importantly looking like, because sales numbers thus far have been very, very strong. Is that a trend that is likely to sustain itself, because it's getting reflected in the way the stock price is re-rating itself from a level of 100 to now 130 plus, 125 at last count. Mr. Dasari, it's great to have you on the show. Thanks very much for taking out the time, sir. My first question to you really is about, despite there being numerous headwinds and consecutive slowdown in the CV space, you continue to enjoy over 30% market share and continue to clock in volumes much higher than your peers. Talk to us about what has helped sustain this growth momentum at a time when, you know, private investment has not picked up in a meaningful manner.
Well, this is not a one-off or one-month kind of event. We have been building a whole range of products that will be helpful for our customers. For example, when it came to BS4, we did a lot of innovation for over the last 3 years, and we were the first and only company in the world to come up with a EGR or exhaust gas recirculation based BS4, which is very, very useful for our customers in India. The second thing that we've been working on for several years now is building our network across the country. So we have more than 10 times increased our network over the past 5-7 years. So combination of the fact that we have good products and a very good service network has helped our customers gain the confidence with Ashok Leyland, and that is what is reflecting. September was very good, so I hope that it continues.
Why CV sales have suddenly made their comeback, Mr. Dasari? The July, September, August, 3 months sales have been strong. Now, the CV industry was supposed to suffer because of GST implementation, but the data points are indicating to a strong revival.
Well, CV industry to suffer as per GST was more a media creation, and I kept saying many times that it is not going to suffer, because if you break down the truck industry and the commercial vehicle industry, you have about 80% being trucks and 20% being buses. Buses don't get necessarily hampered by the GST. As far as the truck business goes, only about 25% of the buses are normal load or market load, as we call it in industry terminology. Balance are either construction tippers or intermediate commercial vehicles that move within the state, or purpose-specific vehicles like tankers or bulkers and so on. So the 3/4 of the truck industry is also not affected by the GST. But what had happened in up to June, we had two problems. One was the BS3, BS4 migration, when customers were waiting to see how the vehicles will perform before they make their purchase decision. And second, customers were waiting to see what will be the impact of GST, and they were delaying the decisions. So I think that caused a slight delay in purchase. And so if you look at first quarter, the industry didn't do so well. Second quarter, we caught up. Even after doing such good performance in July, August and September, the industry as a whole is flat compared to last year. But what you should note is not the number of trucks, but the number of axles that are getting sold, because what used to be selling a year or two or maybe 5 years ago, if you go back, was a lot of 4x2 vehicles, whereas now, which is 16-ton gross vehicle weight, whereas now what we are selling is the highest volume is now a 37-ton vehicle, which is a 10x2 vehicle. So the price is almost double or more than double. So even though the vehicle volumes are flat, because of the mix moving to much larger vehicles, the revenue is higher.
Okay, that perhaps makes sense of what's happening with the market. We also are given to understand, Mr. Dasari, that a major part of the recovery seems to be driven by LCVs, light commercial vehicles. After 7% growth in LCVs last year, what's the growth that you're targeting this year, and what's the investment that you're looking to make in mini trucks and allied products?
Well, the LCV segment is for the year is growing well for us. We have grown about 20%. MHCV is also growing. For September, we grew the total MHCV we grew about 32%. And we also grew in exports. I think exports for the year we are at about 45% higher than last year. Part of it is because, if you recall, everybody had BS3 vehicles stuck at the end of March, and we were able to export about 1,000 odd vehicles. Despite that, I think the exports performance is pretty good. LCV, I don't think we need a capacity expansion right now. We are doing product expansions. We introduced the Dost Plus recently, and you will see more products, almost one every quarter, as I had told before. And I continue to hope that the LCV market will do well.
Okay, just want to get a quick sense, Mr. Dasari, also on what you're doing with regards to, the business plans laid out. You'd earlier spoken about plans to reduce dependency on the trucks business. What are some of the segments that you hope to focus on as, the contribution of trucks versus others to the overall revenues goes through a change? What kind of a product mix can we expect from Ashok Leyland over the course of the next 3 years?
Good question. I think we had said we have 5 other businesses. Now we have 6 other businesses. The 5 businesses that are going to contribute revenue this year, one is the bus business, which we are doing well, but the bus business itself, the TIV or the industry volume is low right now. Compared to last year, the bus volumes are almost down about 25%. But they will catch up as the market picks up. The LCV is doing well. Our spare parts business or our aftermarket is doing very well. We are up about 36% just in September and about 23% for the year. Our defense business continues to do very well. We are about 40-50% higher than last year. Our exports are doing very well, as I told you earlier, about 40-50% higher there. So we are also seeing good traction in our power solutions business. And the nascent business, for which we don't have volumes yet, but great deal of excitement, is our electric vehicle business, which we have created a new business vertical. So all these 5 or 6 businesses are growing faster than the truck business, except the bus business maybe. And although the truck business is growing well and the truck team is doing a very good job, we need to grow the other businesses faster so that we can meet our strategy of becoming a decyclicalized company.
Okay, and in all that talk, your market share in the bus segment has declined last fiscal, and you've spoken about that as well. With the launch of electric buses, do you plan to grab a larger share of that segment? And how much have you studied the viability of the electric buses? Because that's supposed to be the government's big drive as well, e-vehicles.
Yeah, I think 2 points on that. The electric vehicle technology is changing every day. The motors are changing, the batteries are changing. So there are various types of approaches. Like I had said, that we will have a long-range vehicle, a short-range vehicle, and a battery swap system. Battery swap system has not been successful anywhere in the world, but we have hopes that it will work in India, given our condition of short-range travel is much higher and the availability of brakes is higher, especially for the city travel. So I believe that it will work. So it is still long range. It will take 3 to 5 years before you see substantive volumes. My worry is that in the near term, every tender we compete, we've got Chinese players coming in who are backed by their government, and they're bidding ridiculously low prices. So I hope that our government does not give the taxpayer-based incentives to Chinese companies.
Okay. Vinod, what about the pricing environment? I get feelers when I speak to some friends and analysts in the industry that CV companies are indirectly offering a discount. Is that true?
Not indirectly. They're directly offering a discount. But, as I have said before, we will not chase market share at the cost of margin. So if you look at our market share at the end of June, we were at, I think, 34%. At the end of September, we are down to 31.7, 32% approximately. So we've lost 2 or 3 points of market share because we did not chase every deal. If we chased every deal, regardless, because our goal has been to get to double-digit operating margins consistently. We've been able to deliver that 9 out of the last 10 quarters, and hopefully we will get back to it. But our goal is not just market share, but profitable growth.
What is your understanding of the inventory in the system?
Our inventory is less than 1 month. Our dealers don't carry more than 7 to 10 days. We have always operated only on a cash and carry. We don't stuff our pipeline. We measure each regional manager on making sure that no dealer is having more than 7 to 10 days stock. And all our dealers operate on cash and carry, which allows us to keep very low working capital overall.
Okay, closing comments. Can we assume that the trend which is there in the month of July, August and September, is that a trend which will only accelerate as the economic growth picks up, or last 3 months have been a one-off, it's unlikely to repeat itself?
Last 3 months, as I told you earlier, because of the fact that we had BS3, BS4 migration in the first quarter, as well as some concern about what will GST bring, people had slowed down. But that's caused this quarter to be very good. Usually Q3 is the slowest quarter for the truck industry. But, our industry runs on 3 things. Infrastructure, mining and GDP growth. I think post-GST, the GDP is starting to catch up. Infrastructure, the government is doing a super job in building the infrastructure, so there is a lot of demand for tippers, etc. And then I hope the mining also continues, and that will allow the truck industry to do even better.
Okay.
All right.
All right, sir. Appreciate your time. Thank you for joining us.